We had earnings come in last week from 18 of the financial companies, and all 18 of them had better than expected earnings. This is great news, but there is a cloud on the horizon, and we want to talk about that. So stay tuned. Hi, this is Adam Anderson, owner and founder of WealthGuard Advisors.
Hello, I'm Blake Anderson, certified financial planner. Thanks so much for joining us.
Yes. So last week we were anticipating earnings from some of the biggest financial companies in America, and we got an 18 out of 18. Every one of them knocked the ball out of the park with the earnings. Great sign. We saw one of our favorites, Goldman Sachs, have a rocketing day. That was amazing. We talked about their dividend, how they've risen their dividend pretty much every year for the last 5+ years. And they raised their dividend again. So those of our clients that have been holding on to that for a long time, congratulations, you got a raise. It did pull back a little bit, so there's a buying opportunity. After it popped up, it came back down a little bit, so there's an opportunity there. But last week, we had some other things that came up that were of concern.
Yeah, so with all those financial earnings, everything was doing really strongly for the first 4 days of the week. And then on Friday, we had a really down day. And that was mostly related to China. Their Moonshot AI came out with a new model, Kimi K3 or something, I think it's called. And this model is, hyper competitive compared to our most advanced models that we see coming out of Anthropic or OpenAI, very advanced AI model. And so that's worrisome for our tech companies. We say, oh, now we've got this competitor where we thought we had a lot more time before China reached the levels of processing power and predictive power in their AI models. But they're right there, nipping at the heels of our Anthropics and OpenAIs and Googles and those tech companies. So we did see a big sell-off, especially in the tech sector, on that news.
So this is reminiscent of about a year ago. We saw DeepSeek was a similar thing. If you're not aware, we've been in an AI race. There's an arms race in AI between us and China that's going on. And we really want to become the dominant player in AI because it could dictate who filters all our information in the future. Do we want it to be the US or do we want it to be China? That could be a big deal. So we did see a similar thing with this DeepSeek that was about a year ago, came out, really shook the market for about a week. And then everyone kind of dug deep into it. As they dug deeper into it, they realized that it was not as much of a threat as they thought. But the AI race continues to advance. So we be aware of that. Now, what does that mean for us as investors? I don't know that it's the end of the world. It's more of a spook, and it has shook the market last week. But it seems like today we're already starting to rebound on a lot of those names. They already were a little bit in the tech companies were already a little bit of a funk already. So it kind of added to that fuel. But we have another cloud on the horizon, which is the resurgence of the war in Iran. And that is caused oil prices to spike. So that is also like an inflationary problem. So that is a new issue. Well, not a new issue. It's a resurgence of an old issue that is one that we've hoped kind of had put to bed.
Yeah, it's market giveth, market taketh away. And right now we're definitely in a little bit of uncertainty where we're weighing multiple factors and seeing which one will turn out on top, which one will be stronger. On one hand, we had the CPI was lower than expected. Inflation was lower than expected. And along with that, the strong financial earnings, which showed a healthy consumer base, a healthy economy. On the other side, we see these, AI race with China, which is very capital intensive. And these companies that are building out these AIs are a very large portion of the overall financial markets. So if you're in a general S&P 500 fund in your 401k, you have a pretty large investment exposure to these AI development companies. So that weighs on it. And then also, of course, the war in Iran, which is back on for now. We'll see what goes on there and if shipping gets stopped again and all of that may or may not happen there. So we're having this give and take between, what's playing the larger role.
Yeah, so it's going to go glass half empty with war in Iraq and this AI from China, Kimi. from Moonshot. That's kind of the glass half empty side of the story. The glass half full is that we had our lowest inflation. We had declining inflation since 2020. The first time that we've seen an actual declining inflation number, which is really great. And also, we saw consumer spending had their best spending since April of 2022. So we have spending is up, and these are all like longer term type of issues that we're looking at that are really big picture, long term. And the the war in Iran is more like kind of becoming a ho hum. Like we're still doing that. As they are learning to reroute oil in different directions, and they're making accommodations to bring oil onto the market. And we're still at like 80 plus. We're not in the $100 a barrel. We're still pretty low. And so these things, the threat from AI in China, and they seem, I don't want to use the word transitory because that was really a bad word with our last federal reserve person. So is it transitory? I don't know that those are long-term issues where the trend of inflation coming down, and also real wage, we had real wage growth. So people's earnings are going up, uh, costs are going down. Those are really great trends. And so I think there's good opportunities out there. So not to be spooked out, I want to just talk about the S&P 500 like we normally do, which is the broad index, 500 top companies in the United States of America. And we have been in a sideways trend. We've identified this, a couple times that we've talked about this over the last couple weeks. But as you can see here, we're just kind of in a flat zone right now. And that's not that uncommon, seeing that. Let's go back for the full year. Here we are back in the first of the year. We had the decline right there in the beginning when the Iran war started. Then we had this beautiful race up at quite a bit. Um, almost 20% right there. And it's not uncommon for us to kind of digest. And of course, every day you log on to the news, you could find some reason not to invest. And you could probably also find some reason to invest. So we are just kind of this sideways zone right now. And I think that ultimately, now July is traditionally a great month. We've had 11 years in a row where July was a positive month, and the average return on July is 1.8. Now we're getting towards the end of the month. I don't know that that's going to happen this month, but I'm still holding out for that 7,600 Spirit of America for us this month. I don't know if that's going to happen, but I'm still holding out for it. But the statistics that we're going to end up in a good year for 2026 is very good.
Yeah, I think this was just another instance where we're following up this. We're in sort of a holding pattern. We talked about software. We were looking at IGVs particularly a month and a half-ish ago. And after we talked about that, we did see about a 10% a jump on the stock, the fund price. But then it's just been sort of trending sideways. So I think there's just another example of the markets digesting a lot of information, and we're deciding which way we're going forward from here. I'm also optimistic, and we're constantly looking for good opportunities within the software sector, but also across the market, opportunities for growth. And I think there are plenty out there right now. So if you're interested in picking our brains and finding out some more opportunities, we'd love to sit down and talk with you and see if we could be of service. Here at WealthGuard Advisors, we are a fiduciary registered directly with the Securities Exchange Commission. And so we're open to meeting with you and seeing if we could be of service on a simple fee-only basis. So thanks so much for watching, and we'll see you next time.
Thank you again. We love you. Have a good week.